Welcome back to FT Markets. Where did investors put their money in 2014? What were the strongest capital flows? Thanks to the invention of exchange-traded funds, we can monitor capital flows almost in real time. ETFs trade like stocks but track a basket of securities. They're used by investors to take bets on economies and regions. With me to discuss the 2014 trends is Simon Colvin, who's a research analyst at Markit, the financial data provider. Simon, welcome. If we look at our first chart, which you brought along, we can see one of the big trends of 2014 that you've identified, which is international investors buying ETFs exposed to the US. Explain the story here then.
Well, as you can see here, we've seen a nearly 50% increase in the assets under management by US tracking.
In 2014, that's the strongest since 2008.
Yeah, that's correct. And it's off the back of several years of strong growth. So what it kind of tells you there is you can see that the dollar's rallying, the US economy is doing quite well, and the S&P 500 is also doing quite well, and it's beating most of the markets worldwide. And investors are clamoring to get exposure there.
So US back in favor. Europe, a slightly different story if we look at our second chart. The inflows not nearly as great and quite down quite sharply from 2013.
That's correct. And actually what it kind of betrays is it's a bit of a tale of two halves. So what we saw...
2 halves of the year.
Yeah, 2 halves of the year. So in the first 6 months of the year, we saw investors, especially US investors, really clamor to get more exposure in the European region.
They believe the European recovery story.
Exactly. But what we've seen in the last 6 months has obviously been the tale of weaker growth in Europe. Then obviously you got quantitative easing, which is looking to potentially devalue the euro relative to other currencies. And so these investors have pulled back quite significantly.
Okay, so if we'd actually done a chart showing flows this year, sort of day by day or month by month, we would have seen strong inflows in the first 6 months.
And strong outflows since then. Yes, that's totally correct.
If we look at our third and final chart, what you've done here is to rank the biggest winners and losers, where the biggest inflows were and where the biggest outflows were. Some striking results here.
Yeah, that's right. Relative to where how much fund these products managed at the beginning of the year, obviously you've got Spain and Italy amongst the top 4 here.
That slightly goes against our story earlier about.
Well, yeah, but then again, if you believe the story of the ECB propping up financial market with QE, so this is again similar to what was seen in the States a couple of years ago, which is essentially a risk rally. So the riskier assets tend to outperform the kind of more prosaic markets.
You can see that as well because strikingly we also have Russia up there at the top and India.
That's right.
2 different stories, of course.
So yeah, 2 different stories. But then
why Russia?
Russia is kind of the hot money. So you know, whenever you have a lot of volatility within the markets, investors really start to pile into these markets.
I think it's cheap.
Yeah,
time to buy.
Yeah, it's worth noting that Russian ETFs under management are quite low relative to some of the other markets that we're seeing here.
Yeah, okay, so you get easy to get a big change.
Exactly, yes, but it's definitely been an interesting story. You know, no matter how bad the news got with the Ukraine crisis and you know the falling oil, investors kept adding to their exposure.
What about India? That's also been very strong.
Well, yeah. So investors really like the Modi story. I mean, we saw it with a big rally.
The Prime Minister,
Prime Minister Modi in the wake of the elections. So the equity markets rallied, and ETF investors again. It becomes very hard for an individual investor to gain exposure to India, but the likes of exchange traded funds really lower the kind of the risk and the operational issues with gaining exposure to India. And so
okay, all right, so an easy to take a bet. Right?
Exactly, and that's the value ETFs.
If we look at the other end of the scale, of course, Germany right down there. What's happened? Why is everyone leaving Germany?
Well, Germany, it's a bit interesting. I mean, it's all tracking one fund. So if you dig a bit deeper into the data, you can see that the flagship fund, which is iShares DAX UCIT fund, has seen about $10 billion of outflows. Now, what we've seen is it's also mirrored in large increases in fixed income. So European fixed income funds have seen big inflows.
So it's not necessarily a turn-off on Germany?
I mean, it's hard to really tell and pin down to the individual cause, but there definitely is an outlier there that's driving this trend.
Okay, Simon, thank you very much. Some very interesting trends there. So, story of 2 halves in Europe, but very strong inflows into the US.